What's up, friend? I am tired of getting questions about what does this term mean and what about this real estate term. So today, in one short video, I'm going to teach you 60 simple terms, the ABCs of real estate.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah. It's one shot, now the future is yours. Go!
If you want to know what something is worth, you've got to hire a third-party appraiser to basically create an opinion of what the home is worth. It's called an appraisal.
Appreciation is when a house goes up in value over time. I appreciate you.
An ARM is an adjustable rate mortgage where your interest rate could go up or down with time. Amortization is basically spreading multiple payments over a period of time. A broker is a person who buys and sells stuff. In real estate, that could be the realtor buying and selling homes or the loan officer selling mortgages. A buyer's agent is basically the realtor that is representing the buyer to help them find a home. A closing happens at the very end of a purchase process when a buyer and seller essentially sign paperwork and a property changes hands from one person to the next. When you buy a house, there's a lot of extra fees that get added on top of the purchase price. Those are called closing costs. The closing docs are a big old fat stack of papers you sign if you want to get the house.
A deed is a piece of paper that says you own a property.
Depreciation means that over time, something loses value. It wears down with time. And in real estate, for you and I, that can equal really big tax benefits. Don't you just love getting a good deal on something? A discount is basically getting a really good deal on a piece of property. A down payment is the amount of money that you've got to put down on a property to be able to secure the loan. When you get a property under contract, you're given a period of time called due diligence to basically check your facts, do some research, and make sure that everything adds up on the deal. A duplex is a home that consists of two separate dwelling units in one. Equity is the part of the house that you own outside of the loan. Escrow pretty much means a neutral third party that holds on to all of the money when a transaction is taking place. If your renter doesn't pay rent, they're going to get kicked out of the property, and that's called eviction. Fair market value is pretty much the fair price according to everyone in the market. A fixed rate mortgage is basically a fixed interest rate on the property that doesn't go up or down with the market. A flip is when you buy a house at a big discount and then hope to sell it for a big profit. Foreclosure is what happens when you don't make your mortgage payments and the house then goes back to the bank and you get kicked out. A fourplex is like a duplex times two, 4 units in one. HELOC stands for Home Equity Line of Credit. An HOA or homeowners association is like a club for certain neighborhoods. If you buy a house in that neighborhood, you have to follow all their rules. If you don't know what a house is, please don't subscribe. A home inspection is pretty much when you pay an expert to go through the house and tell you all the problems with it. If you want to borrow money from the bank, you're going to have to pay them back, but they want some money on top of that, and that's called interest. When you buy a house, happens. House can get broken into, it can burn down. Insurance is a small amount of money you pay to a third-party company that will fix your house and restore it back to normal. Investment lending is when you want to secure a loan on a property that you're actually not planning on living in, and usually it has slightly higher rates.
An investor is someone who takes money, puts it into real estate, watches it grow, and hopes to make more money from it, like my husband.
A landlord is basically the owner and manager of a piece of property that they own. A lease is a contract that a renter signs to rent a property for a period of time. A lease option is like a rent to own. It's when the owner of the house decides to let someone else rent it until they can buy it. When somebody sells a house, they package all of the information about the house and they put it into a file called a listing. Liquidity has to do with how spendable your money is. For For example, if it's tied up in a house and you can't get it out, that's not very liquid. But if you took a loan out and pulled some of that money out, it's very liquid. Liquid. A loan officer is a specialist that works with you in the bank to help you get a loan. The real estate market consists of all of the homes in an area. If you had someone come over to do some work on your house and you didn't pay them, they can pretty much put a demand on the house and you can't refinance it or sell it until they're paid. The MLS is the multiple listing services. This is where realtors take homes that they're selling and they put them on a database for everyone to see. Chris, a mortgage is a loan that is secured by a piece of property. If you found a property that you like and you're thinking to yourself, I want to buy that property, you submit an offer. It's basically the paperwork that says, I'd like to buy your house at a certain price. If you want to buy a house, you go to a bank, you give them your financial information, and they'll tell you, first of all, if you can buy a house, and number two, how much money you can borrow. A pre-approval letter is basically the bank giving you an official document saying that they are ready to give you a loan on the property. Principal is the amount of money that you've borrowed in a loan and have to pay back. Profit is the money that you make on a house. You might think you own the house, but actually the government owns the land. And every year they ask you to pay some taxes on that. When a buyer and a seller come together and agree upon a price for the property, that's called the purchase price. A refinance is when you go to the bank to get a new loan to either usually lower an interest rate or pull some money out of the house. A seller's agent is the realtor who gets paid to help the seller sell the property. Seller financing is basically when the owner of a home finances the home for you to buy from them, and they're basically acting like the bank. If you sell a property, you have to disclose and share the entire history of any problems that you're aware of with that house. A short sale happens when someone is behind on their payments to the bank, and they basically try to sell it to somebody else at a lower price, hoping that the bank will accept a discount. When you buy real estate, it comes with all sorts of tax benefits. So if you want to pay less to Uncle Sam, buy more real estate. If you don't pay your taxes, someone's going to tack it onto your house and you can't sell it until those taxes are paid.
A tenant is a renter, someone who rents a house.
And makes the investor money.
A triplex is like a duplex, only it has 3 units.
When you hold title to the property, it means that you are the legal and lawful owner and nobody else. A title search is something a title company does to make sure nobody else has any claim on the property that you want to buy. VA is a veteran's loan. If you've served in the military in any capacity, the government makes it super easy for you to qualify to basically buy a house with very low interest rates. Hey, thank you so much for watching today's video. If you enjoyed learning about these 60 basic real estate terms, then you're probably ready for the next level of knowledge. I've written a book that explains my journey of going from broke to becoming financially free. It's called The Straight Path to Real Estate Wealth. And if you'd like to get a free copy of that book, click the link below and start your journey towards wealth today. What is a house? I refuse to answer that stupid question. A house, it's like the thing that you live in. Hello, I'm not gonna insult your intelligence. A house? You're kidding, right? You don't know what a house is? It's like 4 walls and a roof and you like live inside of it and you like, I thought we were doing the ABCs of real estate, not the ABCs. Do not use that. Do not use that take. Do not use that. Now use that.